Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Hello, I'm James Preston and welcome to another edition of Executive Corner Expert Talks here on Kalkine TV. And today we're going to be focusing on an upcoming IPO, namely that of Aeramentum Resources. And the best way to do that is to sit down with the Managing Director of the company, Mr. Geoff Muers. And Geoff, it's great to have you here with us today.
Thanks, James. Thanks for the opportunity.
Now, Geoff, first and foremost, what is it that your company focuses on?
So the idea for this company came about really back in 2017-18 when Cobalt prices first ran, and the chairman and I, Rob Thompson, were looking all around the world for cobalt projects, and there's quite a lot of old cobalt mines in Europe and a lot of other parts of the world, and so we started this journey, began in Africa and then migrated towards Europe looking for cobalt, and we ended up in Cyprus. I first looked at the project in 2017 and had followed the project since, and it ended up going into a listed company called Aeramentum Resources in London that listed early 2021, and we made the offer to acquire the asset prior to that, but because the asset was then a little bit late in terms of us doing the transaction, it went into the IPO. We then acquired it in June 2021 for under $1 million Australian dollars. The headline value was £500,000. We've paid out most of that in cash to acquire it. There's another $350,000 to pay post-IPO to own the project 100%.
You mentioned there cobalt as being a specific focus. Why cobalt? Why not a different kind of mineral?
So part of this electric vehicle revolution in the batteries, about 30% of the batteries that are being made do contain cobalt. In the anode, you've got obviously a lot of lithium demand and graphite, and so cobalt prices rose from below $10,000 a tonne to, I think they got to over $90,000. More recently, they were about $70,000 and then weakened a bit. Now they're heading back up. They're over $50,000 a tonne. So the metal's very high value. It's quite scarce. 70% of production comes out of the Democratic Republic of Congo. The second biggest producer is Russia. So a lot of the issues around ethically sourcing minerals has meant that cobalt is one of the critical minerals that's in focus. And we found somewhere in Cyprus that has cobalt, along with copper, nickel and gold as well. So it's a very unique project. And that drew us initially to the project, but since then we've been doing a lot of work on it and have realised that there's a lot of targets there for us to drill, and it's an attractive destination.
Well, you mentioned Russia within that answer as well, and obviously there's been a lot of issues with Russia this year. Since February, we've had the Russia-Ukrainian war. That's obviously impacted supply chains, impacted reserves of whether it be fuel or other minerals. Is there a real opportunity now for the likes of your company to capitalise on that current restrictions that Russia is facing?
Absolutely, and I think the energy crisis in Europe's really highlighted the need for energy independence, but also the price of fuel. And so people now driving slow combustion, internal combustion engine cars are realising at €2 a litre, the cost of that is very high and not coming down anytime soon. But one of the key drivers is you've got somewhere between 20 and 40 gigafactories, they call them, being built in Europe to cater for this burgeoning EV demand. So by 2030, a lot of these factories will be in full production. There's talk of banning internal combustion engines by 2035. And the other thing is there's rules of origin that have been introduced in Europe, meaning that when you're building an electric car or building a battery for an electric car, a certain percentage, I think it's 55% of the materials for that battery must be sourced within Europe, and that's going to prove a challenge. That's the sort of demand that's led us to Europe. Cyprus being part of the EU, we've got a natural advantage there. So when it comes to developing our project, we're expecting a lot of interest in things like offtake, potential development finance from within Europe.
Well, let's focus specifically on Cyprus. You've mentioned it several times so far. But why is it such an attractive place to set up operations?
So I think the criteria you need to look at when you're looking at being a mineral exploration company that wants to develop a mine, I think most mineral exploration companies have that objective and vision. You need to look at the environmental issues associated with mining. You need to look at the corporate side of it, but also the fiscal environment and the government, your relationship with the government, the local community, that sort of thing. And Cyprus had a huge mining history. There's been more than 45 mines, of mainly copper, in history up until the 1970s. It was an issue in the 1970s when the Turks occupied the north. Since then, really, it's been very stable, but a lot of the intellectual capital, a lot of the business owners left in the 70s haven't come back. So you've essentially had all these deposits there dormant for the last 50 years. In our case, 60 or 70 years, because they did some mining in the 1950s on our deposits. So Cyprus you've got political stability, you've got a very big mining history, you've got low corporate tax, I think it's about 12%, low royalties. Being an island, it's a small population, about 1 million people, but it's had a lot of stimulus money going post-GFC. So you've got wind farms, solar, 4-lane freeways. We've got sealed roads within 2 kilometres of site, 45 minutes drive from the port. So when you compare it to, say, a mining project that might be in the middle of Africa or in outback Australia, we've got an immediate advantage on the location front. We've got other advantages, as I mentioned, like the tax. That puts Cyprus at the forefront. We looked at a lot of cobalt projects in Europe, and some of them, cobalt projects can have metallurgical issues. They might have 20% arsenic, for example. They might be on a river course. They might be in an old mining area that's now built up with, like you see in Germany, with a lot of hobby farms and a lot of people who aren't perhaps in favour of mining. Our projects are 90% in a very sparse mountainous area that's technically state forest, although it's not intense forest. And so we're not dealing with dozens of different landowners. And so there's a huge raft of advantages that we liked about Cyprus, and we immediately got comfortable with the operating environment there, with that view to potentially building a mine.
Yeah, well, it all sounds rather easy and simple, which is, I suppose, what you want with any new project. Let's focus on Europe itself here, because you've mentioned that there are some new regulations surrounding what you have to do with mining and sourcing certain minerals. How does that play into what you're doing in Cyprus specifically, and what are the advantages you can take away for Aeramentum Resources for having those setups in Europe itself?
So a lot of these initiatives in Europe are really quite new. So we've seen some countries like France come out with talking about bans on petrol-driven cars. Other countries are looking to potentially follow that. But we've got something now called the European Battery Alliance, which is a group that has 750 members, and that is from all the way from mining companies through to manufacturers and vehicle makers. So all these companies now looking to coordinate the supply chain to ensure that this burgeoning demand for metals like copper and cobalt can be delivered seamlessly, and address some of those issues that we have ethically, perhaps with cobalt sourced in the Congo, or other minerals that might be sourced from countries that we talked about that are in conflict now. So that focus of the Battery Alliance, I think, is something that we can tap into. But also you have a lot of potential for things like low interest loans, European Development Bank, things like that. And you know, it's early days. We need to do the drilling, prove up a resource, and prove that we've got a mining project yet, so we can't get carried away. But we've seen a lot of automakers now moving down the chain and doing offtake agreements with resource companies. So we've seen Tesla, for example, with a lithium mine in the Northern Territory doing an offtake agreement. We saw Renault recently do an agreement for offtake of cobalt from the Bouazer mine in Morocco, which is one of the highest grade cobalt mines in the world, with a lot of similarities to the project we have in Cyprus, actually.
Now, Geoff, of course, as part of Aeramentum Resources, there's plenty of little pockets that you've got to focus on, a lot of different projects. Can you take us through those?
Yeah, so I mentioned we paid just under $1 million. That was really for the Laxia project, which has had about 18 drill holes in it. Of those, about 12 or 13 hit what we call economic grades of mineralisation, up to 18% copper in a narrow interval. We've seen up to 0.5% cobalt, 5 grams gold, and nickel grades as well, up to 3% And so we've got very good grades in the projects. We have 3 main walk-up drill targets, we call them, in our projects. We've got a total of 8 tenements now. We've been applying for ground. We've got 2 applications within that 8. We're expecting to be granted in coming months. And within the tenement areas we've got, which essentially covers the whole ultramafic belt in the Limassol State Forest there, one of them we've identified ourselves. The other 2 have been identified through drilling that was done in 2013. And we've got 1.5 kilometres of adit. So there's a lot of information. There was some trial mining done in the 1950s. And one of the reasons they didn't keep that mining going was nothing to do with the grades, which are spectacular, but they were looking for oxide copper ore, and the treatment plant they were using at the time was not compatible with this sulphide-rich VMS type ore. So it's very unusual globally to have a situation like we have in Cyprus, where we've got this high-grade ore from surface in most of these locations. It's sticking out of the ground, if you like, and so there's been some mining in a small extent, but nothing like you'd see in other parts of the world. So if this deposit was in Australia, they would have mined it in the 80s, or US or somewhere. If it was in Asia or Africa, or indeed many parts of South America, there'd be hundreds of artisanal miners digging up the rocks and putting them in bags and selling it, because it's quite valuable ore, up to several $1,000s a tonne. Some of these intercepts that have been reported both in the drilling but also in the adit sampling. And some of the adits are closed in, some of them can go in. We've seen, for example, a 7 to 8 metre wide massive sulphide ore body in West Laxia. We're very keen to drill that. It's from surface. This adit's maybe 5-10 metres below the top of the hill. We've got a drill rig in country ready to go. We've got to spend maybe €5,000 just upgrading the road a little bit, the old road, to get the drill rig in. That's something we plan to do in the next few weeks. So we also discovered at Apsu, we've got a what I'm calling a copper shear zone. There's an old drill hole there we found a record of that identified quite shallow, 25 metre wide zone of copper sulphides over 3 zones within that 25 metres. So we're keen to drill that probably next year. So we're no shortage of drilling targets. We want to initially drill shallow just to prove up the concept. The modelling work we've done indicates the ore hangs together. We could have come out with a resource pre-IPO. We thought, no, let's do some more drilling on it for about 12 months and come out with a resource that's bigger. Maybe an exploration target, something after the first few months we can come up with. So we're very keen to get the diamond rig moving, show our investors this spectacular looking VMS ore body that we will see in the core trades. Hopefully, if we're drilling by November, the average length of a drill hole's 100, 150 metres. So one every 2 weeks we'll be bringing up, hopefully, something to show investors, and then 8-week turnaround, first assays probably early to mid-January.
Yeah, tremendous. Now let's focus specifically on your investors and the IPO so far. How has the capital raising process been for you?
Yeah, so we're a little bit different to a lot of IPOs. A lot of IPOs come up with the idea they want to raise money to acquire an asset or explore an asset or do a deal. We've done the deal. We raised about $2 million over the last 18 months, and we've spent a lot of that on not just project acquisition, but we've had up to 5 or 6 geologists working, doing mapping and sampling. We recently did it's not so much a bulk sample, but about 50 kilos of samples of this material at surface, and we got very consistent grades, around about 6 grams gold equivalent within that, 1% copper. Cobalt's about 0.1, 0.2. So what we're seeing here is some very high grades, but 20 cent IPO. So we raised seed capital at 10 cents last year, and the IPO is 20 cents. We put it on hold back in June. We were very close to pushing it to raise 5 to 8 million. We've now dropped that back to 4.5 to 6. And the market, I think in the last 3 months, is becoming a lot more receptive to what's happening in Europe now with this demand. So we're hoping to raise 4.5 to 6. We've got certainly more than half of that committed already from existing shareholders. We've had interest from a wide range of groups, mining companies, private equity, private investors, and so we're getting quite a lot of interest in the IPO, and we're hoping perhaps to close it early. That's our plan.
Was there a reason you decided on the 20 cents for the issuance price and perhaps not a bit more?
I think investors now, they like to see value. They don't like to see a company coming on and pushing the valuation too high. So our market cap will be around 10 million, EV 5.6 million, so it's quite competitive valuation. And as I mentioned, we don't yet have a resource, you know, we haven't got a mine plan, things like this, so we need to keep it, I guess, quite aggressively priced, and that's what we're looking to do. And directors have reduced their shareholdings now to keep it lean and you know, based on some of the feedback we've had. So in our mind now and in the minds of our investors, we've got a much more attractive offering that we're bringing to the market now. It's well priced and tightly held. We've got perhaps 130 shareholders. We'll bring in another 200 or so shareholders as part of this capital raising.
It all sounds very exciting. And Geoff, just before I let you go, is there any final thoughts you'd like to share with our audience and with your existing investors and potentially new ones?
Look, I think the key message to take away is just have a look what's going on in Europe and look at the demand we're seeing. And I think look at the lithium market, very tight. We've seen the price rise up to sort of 70,000 US a tonne. Copper, cobalt prices have come under a little bit of pressure, but the outlook going forward, it's particularly with inflation the way it is, with diesel price the way it is, it's going to be a lot more expensive for a lot of these lower grade projects to keep going. So we're going to see mine closures at these prices if they don't pick up. We're going to see it more expensive for some of these bigger mines that might have cost $1 billion 5 or 10 years ago. Now they're $2 billion. And so they're going to take longer to come to market. So the supply-demand equation for the metals we're talking about, nickel, copper, cobalt in particular, is very attractive. So, and one of the key benefits of our project makes it very unique. We've potentially got 4 revenues if we can prove up what we've got here. I mean, Bouazir in Morocco, very similar mine, been mining for 85 years. They're down now at 900 metres deep. And they've seen, as the mining gets deeper, the nickel grade picks up, the cobalt grade 1%. So we've got very similar geological setting, very similar mix of metals, and if we can demonstrate to investors the deeper we drill, and we won't be doing deeper holes probably till next year, but if we can prove this theory that the nickel cobalt grades in our deposit pick up with depth, then I think investors will get very excited, as will we, that our concept, being that we've got a very substantial deposit here that's open at considerable depth, that will be a long way to being proven. So we're very excited to get drilling.
Well, fingers crossed that the excitement does come to fruition. Geoff, thank you so much for joining me today and all the best with the IPO.
Thank you, James. Thanks for your time.
Well, that's Geoff Muers, the Managing Director for Aeramentum Resources. And if you missed any part of that chat, you can catch the full interview on our YouTube channel, Kalkine Media. So make sure to subscribe. I'm James Preston, reminding you to stay apprised and invest wise with Kalkine Media.